Bo Bruskern here with your LFD Digest for the week of May 25th, 2020. We start with highlights from our panel called How Leading Consumer Lenders Are Navigating a Changed World, which was led by Leslie Parrish of the IT Group, an independent research and advisory firm. Leslie asked the panel for their early read on consumer health. And here's what Jason Gross of Petal said about their current performance in their largely low FICO customer base.
Sort of counterintuitively, the last few months, we've actually seen some of the best performance ever in our history. And when we analyze, why that is, first, there's been, we do see a decrease in customer income associated with loss of employment, loss of hours, et cetera. It's been offset, more than offset actually, by the overall decrease in customer spend that we're seeing with significantly less discretionary spending. And between the sort of increased unemployment benefit, government stimulus, and tax refunds, we saw a lot of people, even folks that are sort of habitual min payers, for instance, that pay the minimum on their credit card every single month, we saw a lot of people paying off more of their debt.
We are experiencing rapid change in consumer behavior right now, much of which is forced change. The big question is, what will stick? Here's Marc Butterfield from the First National Bank of Omaha.
We're going to invest a lot in upping our game from a mobile and account origination standpoint. And because we know that needs to change, because consumer behaviors, at least some of them for sure, will change forever.
And James Paris adds this about Avant's ability to adapt.
It's a combination of a lot of phone calls outbound, it's emails, it's text messages. And so I think having that multi-pronged strategy. And then I'd say finally, we were able to move the entire sort of global servicing back office operations to a virtual, work from home environment.
Switching gears now to a community banking panel, Phil Goldfeder explains why tech-forward community banks may be well positioned as we emerge from this crisis.
Sort of the trust, reliability foundation of a community bank combined with the innovative offerings of a tech company really, I think, is the perfect way to serve consumers in the safest and most reliable manner. And especially given what's going on now, is really offering them the services they need, where they need it, when they need it.
Community banks have been doing yeoman work to serve the liquidity needs of the country's small businesses. Here's Chris Tremont of Radius Bank.
The team standing up a digital loan application in, I think it was like 6 days.
I think we did it in 5.
Yeah, right? Pulling an all-nighter to get that live on whatever it was, the 3rd or the 4th, probably has been the biggest. I think the group will look back on it fondly, but, when you're in the heat of it, was probably the biggest challenge.
And the competitive dynamic is certainly going to change. Here's Chris again.
Around, okay, so maybe we all acquired a number of new customers over the last 2 months that maybe we otherwise wouldn't. But we know that the likes of JPM and B of A and others are thinking about going digital, and how are they going to win those customers back? So for us, it's, thinking about how do we stay out there, stay active, keep our customers happy, and retain them over the long term.
But the way in which banks serve their clients and where they serve them is likely to change. Here's Dale Obergfell of Midwest Bank Center.
Will we continue to have 17 branches across the St. Louis metropolitan area? We might shrink that. But that doesn't mean that we're going to vacate the St. Louis region and how we serve that community. We may add new communities to that group, but our basic approach, values-based, customer-centric, is really key there. And so the customers will help us drive how we recreate ourselves. And ultimately, I think it will change, but I don't think it's going to be as dramatic as some people might think.
My partner, Todd Anderson, asked the panel whether regulators have been hard to work with. And Phil answered with an emphatic no.
I'll start. Look, I actually think they've been understanding. I mean, look, they're in the exact same position we're in. They're working from home under tough conditions with not all the resources and tools they need, with the same amount of responsibility to protect the integrity of the system.
Now, there's not a great deal of consensus on how community banks will fare in the next competitive dynamic, which is still unfolding. But one thing is clear, technology will play a material role. So we asked our panel how they view fintechs as partners. Here's Chris from Radius.
We said at Radius we're going to have a fintech strategy, but we're not going to bet the bank on it. But over the long term, I think partnering with fintech, which is usually synonymous with startups or smaller companies, or at least that culture, will continue to grow and be pervasive and help, some of us on the smaller bank side grow and compete over the long term.
And Phil from Cross River.
I'll just sort of take one word that what Chris said is partner, right? We don't talk about our tech companies as clients. We're not just here to provide a service. And going back to what someone said even earlier is, I think Dale, is sort of, if one rises, we all rise, right? If the tech companies are successful, then the bank is going to be successful, and we're successful together.
And Dale from Midwest Bank Center.
My first thought about fintechs really doesn't just define fintech with new technology. It would be any provider, frankly, Jack Henry, Fiserv, or FIS. They have to be good partners, as was just mentioned. And I think they have to help us make good decisions. The good fintech is the person who helps me make a good decision. I think we've aligned ourselves well with a few fintechs, and yes, they're startups, and that's okay.
We hosted another star guest, Joanne Barefoot, who is renowned internationally as a regulatory expert. Peter enjoyed a one-on-one conversation with her. Here he asks how the economic upheaval of this COVID moment will compare to the GFC of 2008-2009.
The other day, the first financial crisis, the last one that is, froze up innovation. Everybody stopped innovating for a long time, but this one is going to accelerate it.
When asked if the United States regulatory system could be structured in a manner like the Financial Conduct Authority in Great Britain, Joanne gave this not entirely disheartening response.
I'm not sure we can reorganize to have that, but I think we can get the US regulatory system to perform the way the one in the FCA in the UK does, and I'm a great admirer of it.
Joanne also tipped her hat to Nick Cook, head of the FCA, and explained why regulators are beginning to consider dramatic changes like moving to open source regulatory code.
And I think Nick Cook, who heads innovation there, is a world treasure. He has done so much innovative work. And everybody can learn from that. Everybody doesn't have to reinvent their own wheel. The agencies are starting to talk about and are actually moving toward open source code. But some regulators are attracted to this because they can see the opportunity to do better and be more efficient. But I think there's a growing number of regulators that are, especially as the pandemic is hitting, are sort of waking up to the reality that it's getting more dangerous to hold still than to move forward, even if you're not exactly sure what to do. Nick Cook at the FCA has said that they figured out a few years ago that if they held still and spent 2 years figuring out something which wouldn't be figured out in 2 years, he coined the phrase they would be accelerating backwards because they'd be 10 years behind if they wait for 2 years to start to move.
Right.
I think that realization that it's risky, these are risk managing organizations. They are starting to realize that it's risky to be slow.
We'll close with this excellent commentary from Jason Gross of Petal on the ability of alternative credit providers to aid the recovery of our economy.
And in our case in particular, being so sensitive to recent information and cash flow information, as consumers are beginning to go back to work and we reopen the economy, we want to be able to meet the credit needs of consumers at that point in time, notwithstanding financial distress that they may have experienced earlier in the year.
Thanks for watching. As always, get the most out of Lendit by joining the LFD community at digital.lendit.com, where you can find all of our full-length replays. Until next time, keep up the hard work and take care.